I'll just make three quick points. I think the first one is actually to not underestimate the policy framework. I think most importantly, I think the regulatory framework. I think if we're talking true PPPs and true transfer of risk and where the private sector really performs a service on behalf of government, those assets that they're involved with, whether they're toll roads or hospitals or things like that, at the end of the day, the private sector actually doesn't own those assets. In fact, the lenders don't even have security over those assets. So, they are strategic assets of the state. So if one looks at it like that, the only asset that the private sector has in a PPP really is the contract. And therefore, the regulatory framework that enables and protects that contract over the life of the project is absolutely key. So while one might, if that is not in place in certain countries or in certain regions, while one might do the odd deal, at the end of the day, I don't think one will consistently attract private sector capital if one hasn't actually sorted out the top framework properly at the outset. The second point, I think, is one around quality control. I think if these are government's projects at the PPP level, then I think it's important that government's very, very clear when they approach the private sector in terms of what they're looking to achieve from those projects, whether it's in terms of the output specifications or whether it's the risk transfer. So I think it's important for government to identify a suite of projects that they see as key projects, but importantly, which projects are better suited to PPPs. I don't think all projects are well suited to PPPs. So I think it's important for government to identify those projects that it wants to implement, and then to, I think, mobilize the political will and the capacity of government behind those few projects, and then to see the process completely through. I think there's nothing that disrupts private sector appetite or investment potential more than a disrupted process, or a process that starts and is basically collapsed before it finishes. And I mean, ultimately, I think if one has that repeating, that does ultimately affect your value for money when you do actually close a project. I'm sure there's a tendency on the private sector side to price in that process risk to some extent. And then I think the third point is, I think it's important for all stakeholders to be more pragmatic around actually closing deals, and I'll happily include the lenders in that bucket as well. So just as an example, if one says in the UK, for example, they have 2,000 PPPs or PFI deals in play, then I think it's fair enough, if one's spending one's time talking about the second decimal place on the coverage ratio, or whether one's got a 19-year term on the debt on a 20-year concession or 19.25. But I think in South Africa and Africa, I think the need for PPPs is a lot more fundamental than that. I think it really is about mobilizing public sector skills and private sector skills and capacity together, and actually using that to build infrastructure and deliver service. So I think it's a cultural thing to some extent, but I think stakeholders really need to focus on top 4 or 5 commercial issues, get them sorted, and actually close the deal. And perhaps one idea to unlock that, because I do understand that from the government side, there is there can be a concern around the private sector making exceptional returns, because they haven't been analysed or allocated properly. And I think to unlock that, it's probably better to close the deal on an 80-20 basis, and then provide flexibility going forward, rather have better sharing mechanisms for government in terms of exceptional upside. So if there is exceptional upside achieved in the private sector, whether that's the concessionaire level or the subcontract level, then the government shares in that, through some sort of mechanism. I think that would just maybe reduce anxiety up front, and actually then we can get on and actually close some deals. Thanks. So I think it's important that the legal framework is in place as a starting point, but I would agree that I think the spirit of the partnership and the regulatory environment is critical. Actually, less from a risk point of view, but I think more from a we need to treat these PPPs as dynamic projects that evolve and develop over time. So I think there's a tendency to sort of negotiate contracts and try and, at the outset of a 20-year concession, sort of anticipate every permutation and try and contract for it. At the end of the day, I think if one develops an active partnership and a spirit of partnership between the private party and the public sector, that I think is much more effective to dealing with the risk issues over time, and also to optimize value. So the partners are always prepared to get together and agree to tweak things as things go, because it's impossible to predict and anticipate those things at the outset. So I think one must tick the regulatory box, but I actually think in optimizing value from concessions as an investor or as a lender, or in fact as government, I think that spirit of partnership is probably more important. And I think we've seen good examples of that in certain deals, and there's good examples in other deals, and certainly the deals where we've seen an active relationship being sort of developed over time. I think you've seen much better outcomes in general for those projects. I think on the risk transfer issue, I think it's probably a bit of both. I mean, when one says risk transfer to lenders, I think one needs to talk about risk transfer to the private sector, because at the end of the day, the lender sits behind the private party. I think one can improve risk allocation as long as one has the tools to deal with that. I think there are opportunities to improve that, but I think we're generally just overworking issues. I really believe that if you look back on deals, and I think we've spent far too much time on things that, at the end of the day, if one has the spirit of partnership, it is neither here nor there in the contract. I think we really need to, as a collective, try and focus a lot more on the big ticket issues on an 80-20 basis. Maybe one idea is to have, within certain countries or regions, to have actually industry forums that focus on the different sectors, and then let all stakeholders in the sector look to identify key projects, how best to unlock those, etc. So I think when it gets probably too high level, it's as you say, it's that balance between high level and let's actually get down to the nitty-gritty of the actual projects. So perhaps the industry forum level is probably the right level to sort of have those discussions and get all the key stakeholders from government and private sector for a particular industry, a particular country or region.
Doing business in Africa, you can't afford to be without Africa Investor.